a series of symposiums around the country and specifically focused in the coastal states. And we looked around and we said, who should we go to first? Where should we go? Who is doing interesting things that could serve as a model and a best practice for some other states to replicate, not only in the southern states, but around the country. And so we decided to choose Charleston to launch our nationwide symposium series. Again, looking at coastal resiliency, looking at mitigation issues, looking at the environmental issues, but also being very mindful of the fact that a lot of consumers are struggling with the insurance affordability, the accessibility of insurance in some of these coastal states.
We need to make sure that for those who live here and who come here, that there is a stable insurance market. If we lose that, there are tremendous macroeconomic problems that occur in a community. And a stable insurance market requires good code enforcement. It also requires we have to increasingly seek appropriate processes of intervention. Pools, catastrophic event insurance, or other things to make sure that that market can be stable and can exist, and that insurers want to be involved in it, that it's worth their while to insure, because you've got, it's not just maybe the fancy new house that somebody with means can afford, and even if the insurance is quite high, they can handle it. It's the workforce, the average people that live, that make our community function. And if all of a sudden their capacity to adequately and affordably insure their homes or businesses is lost, then a rug is pulled out from under the community.
We already know that our coastlines are challenged, but the increased intensity and frequency of extreme events threaten economic stability, human well-being, and of course insurability. And insurers increasingly recognize that preserving insurable markets is not something they can do alone. Since the blueprint was released late last spring, some of those same voices from the insurance industry and the environmental community have joined with others, especially taxpayer advocacy groups, to begin to advocate on Capitol Hill for risk-based policies that promote continued insurability and risk reduction. Those are policies like reforming the National Flood Insurance Program to reflect real risk and prevent the continued rebuilding in places that have repeat loss. It's policies that protect coastal ecosystems, that protect us, policies that help provide financing to low-income homeowners to help them retrofit their properties and be more climate resilient. Those are all actions that we're taking together and that we take very seriously.
As we look at what are the possible solutions, the Travelers Coastal Plan has 4 key principles. And so let me dive into those 4 key principles. It's a stable and consistent regulatory environment. And so what do we mean by a stable and consistent regulatory environment? Companies have to know that the rules are going to remain the same or similar going forward after an event. Just like the regulators want to make sure that insurance companies have enough money to pay the claims, which is the first promise insurance companies have, we want to understand the rules going forward. And so what we're advocating is limited either federal preemption for named windstorm coverage or other ideas to achieve that stability. The second idea that we have is creating transparency in our rating calculation. We hear a lot from consumers and regulators that it's very difficult to predict the risk. They don't understand how insurance companies are doing that. So we're advocating setting up an independent commission to evaluate how these hurricane models work. And if these hurricane models that are used to price and predict risk are out of balance over time, there would be a mechanism to stabilize those rates to provide credits to consumers on a going forward basis. The third key principle is federal reinsurance for extreme events. If you think about events that are multiple the size of Hurricane Katrina, those are extreme events, and companies have to hold capital to meet those obligations. And many states, as well as larger companies and regional companies, have a problem deploying more capital in the marketplace because of that concentration of risk. And so we're talking about federal reinsurance, not a backstop. We'll pay the federal government a premium, an expense component, but we won't pay the federal government a profit. The last one is what we've talked about is encouraging stronger homes through tougher and more prudent building codes and land use planning. And commensurate with that reduction in risk, there should be a credit in the insurance premiums. We've done our own analysis within Travelers, and we look at those mitigated homes compared to unmitigated homes in Florida, and we saw a 50% difference in our own portfolio of the damageability due to improved building codes. Well, there should be some way to incorporate that into the insurance mechanisms to incent the right behavior for consumers, you know, so they know if they do the roof tie downs, they know if they put on the storm shutters, that their premium is going to be reduced going forward.